Now, with South Africa's rail infrastructure challenges derailing many businesses and the economy in terms of profits and growth, Transnet has taken steps to embrace the privatisation of the rail industry as a solution. This via a draft network statement highlighting the means for privatisation to bring reform. Willem Sprong, who's a specialist on infrastructure risk management from the University of Pretoria, dealt with this topic at the 42nd Annual Southern African Transport Conference, which is currently underway. He joins us now with more insights. Willem, an absolute pleasure. Good afternoon.
Hey, good afternoon, and thank you very much for the invitation to join you.
Wonderful, Willem. I'd like to actually speak about the issue of, maybe before we get into the nitties, private participation versus privatization. Because I think, the two might invoke very different emotions in people, but is it essentially the same thing?
Yes, it depends on which direction you're looking at it. I guess privatization is when we get rid of our assets and we sell it off to the private entities and they take it over. But I think with the direction that we are moving in is more private participation, where we will invite, or we're seeing government inviting private organizations and companies to join them in trying to rectify this logistical nightmare that we currently have being called our railway network.
Now, we know, of course, Willem, that the issues at our TFR are well documented here, but I just want to recap on some of these issues and maybe even root causes, because it's all good and well for us to see how things have gone wrong, at surface level. But this took years. It took years for us to get to a point where Transnet would be so inefficient.
Yes, I think if we look at what's happening now, last year when we were getting together at the South African Transport Conference, there was quite a negative feel about it. And we warned each other that if our railway network fails, then we will for sure have a failed state. It was agreed that if we can't save the rail network, we will have problems. And I must say, when I visited the conference this year, there was quite a positive feel about it. And referring back to 2021, when the draft National Rail Bill was published, in the preamble of this bill, we already recognized that rail as a transport mode in South Africa has failed to adapt to the changing environment, the changing economical climate that we have. And we saw that a lot of our logistics moved to road, which caused a whole lot of other problems. And the bill also recognized that there needs to be a unified approach in our country to reverse this deterioration that we saw from way back then. And this is where this whole establishment of an infrastructure manager and the Transnet Rail operating company and this vertical separation that's now taking place, where all of that started in this vision to try and reverse this deterioration.
I want to speak about this virtual separation. It's a very important part here, because I'm keen to find out what exactly we're trying to achieve here by separating the infrastructure management as well as the operating company.
So this all came about with the publication of the bill, and this rail policy had the vision to position rail as an affordable, competitive, reliable and a sustainable mode of transport, which will form the backbone of the South African freight logistics, and hence also a very important part of the National Logistical Crisis Center that President Ramaphosa established last year, just after the State of the Nation address, was getting experts involved to see how we can rectify and reverse this deterioration in the rail.
I want to then speak about the draft network statement. I think it's all part of, this bill that we've been speaking about today, Willem, and how it does also then prescribe the ability for rail to be redeemed in South Africa, but then also then to, as a result, return to being something that is globally competitive and, of course, good for our local economy.
Yes, certainly. We need to reduce the price of doing business with South Africa, and our rail logistical network is the most important tool that we have to reduce that cost of doing business with us. And as part of this rail network statement, South Africa classified most of their line, or all their lines. And we saw through this classification that we recognize that there's three important, what we call bulk mineral core lines, the lines that export or aid us to export our minerals directly from the pits, the mines, to the ports. And these are the Oryx line, the Sishen-Saldanha line, the coal line, which transports the coal down to Richards Bay. And then a third line that I think most of us underestimated before this network statement was published is the line transporting the minerals from Palabora down to Richards Bay through Eswatini. And hence this network statement that was published also emphasized the very importance of network dependencies, where the Transnet network, our South African rail network, is also dependent on our neighbors, for example, Eswatini. And the only way that we can really get freight back from the road onto the rail is to have established this infra manager, to allow for private participation on our networks, and of course government in terms of, by word of the Transnet operating company, will also be a very important role player in this whole process.
But an important part of us becoming competitive again also rests on money, on investment, and on us being able to convince, external parties as well as for government as well to be seen to be investing here. I want to speak about that aspect because it's one that will not work even if we have the best plans, in the world. We need to make sure we've got the balance sheets to, of course, capitalize on our rail.
Yes, of course. We must first realize that somebody had to oversee this whole process. And as late as the 11th of June 2024, Act 6 was signed into law, and that allowed for the Transport Economic Regulator to be established. And this regulator will have to take into account the cost of the infra manager to, first of all, recover its investment in owning and managing this rail infrastructure network. And there's, of course, also a huge administrative cost. We saw that Transnet published studies that were done in the lead up to this whole establishment of the infra manager, and they estimate that only the administrative cost to establish the infra manager is about 900 million rand. A huge portion of that, 780 million rand, being the establishment of the ICT that they require, the way bridges, the measures they need to put in place to transfer the orders into cash and to do this planning. And apart from this investment of just owning the network, they also, the regulator will also have to take into consideration the cost that needs to be recovered in maintaining and operating the network. And of course, we would like to see our network also to expand perhaps in the future. So there needs to be some allowance for expansion. And the infra manager will, of course, have a risk in owning and managing this risk that they will try and transfer in terms of insurance. But that also needs to be included. But then most importantly, I think that, and that touches on your question, is that the cost that we are going to incur must support the economic objectives of the National Rail Bill. And these are informed by network density, track utilization, the existing rail market, new emerging rail markets, the volumes that we are going to transport. So there's a whole amount of factors that we need to consider when we talk about the economics of owning a railway network and operating that.
Well, it looks like lots of work to be done. Willem, I suspect we'll be having conversations like these and more for a while to come. Thank you so much for your invaluable contribution this afternoon. That was Willem Sprong, specialist on infrastructure risk management from the University of Pretoria.